Good day. Ira Epstein of Linn Associates with your metal market wrap-up for this Monday, the 10th of May, 2021, and we're now after 6:30 p.m. Central Time. So as I'm looking at what the market's doing, you know that we fell back in a lot of the metal markets today. In fact, the markets as a whole fell back. The stock market was down just about everywhere, and it's one of these things where the market's still digesting that Friday's jobs data. It doesn't just go away that fast. But gold down, the dollar lower today, sort of mixed and overbought in a number of the currencies, in my opinion. Most of the energy markets down a little bit, and you wouldn't think that given the hack attack on the Colonial Pipeline, and yet there the market is down. Now they are already looking at prices inching up on the East Coast in their gasoline and their diesel, and it wouldn't surprise me if the situation gets even worse before it's all done. But we're talking about gold here, so as we're talking about gold, you're still over, and that's the good news, you're still over the 18-week moving average of closes, so the bias is up in the market. As we take a look at the chart action, you can see how the market spiked up. In fact, went further than I thought it would go on the first run, and that doesn't bother me if you're bullish. Markets got higher lows, higher highs. I'm definitely in the bull camp at this point. The support in the market falls back into categories. It starts right at the 1830 where the first resistance point was, and we weren't too off on that, to be honest with you. This was the action on Thursday. Nobody saw that jobs data on Friday, so you spiked up. You came around today a little bit lower, and you're still backing off a little. But that's still going to be a good support area as I see it from 1790.20 to 1830. 200-day average over the market is another resistance point. And if you look at the Bollinger Bands, the market is doing its best to stay over them. That's a sign of new strength that the market has caught. Now, do you stay over that Bollinger Band very long? I think you know the answer to that is no. 5% of the time you stay over that number, so I am looking for a pullback or an attempt at least to get to the right-hand side of that band very quickly. What about the market here in the slow stochastics? You're overbought. Yes, both numbers today, and that is tonight, are over the 80 level. But if we step back, the first day they settled over that number, both together, was on close of business today. If you go to Friday, they didn't have it. You need 3 days in a row to convert a market from being overbought to locking in a trend. Let's give it the other two and see what it does and see where the market can carry us. Some people are already talking, could this be the move that carries you to $2,000? I don't know. In the gold-silver ratio, you can see how the market's staying under this, and as long as it does it, silver is actually stronger than gold. And silver has a better technical picture than the gold. Number one, the market climbed all these different layers of resistance. The 200, the 18, the 45-day, came back, tested it one time. With the jobs data went up, now pulling back. The market is overbought, not embedding. So that could be the big difference come Wednesday's trade when the market, maybe we get the embedded reading in the gold. But until then, overbought here, overbought in the gold market. So I don't think you're catching new buying on these rallies. In the copper market, I was looking at this market and going to myself as it was popping up today going, folks, you're strongly over that upper Bollinger Band. I realize you're overbought, but the market's starting to not act like it wants to stay over that. I was watching it from the get-go all day because I had a client with a lot of positions in it. And the market started backing off. And he did well. He got out of the market very well. And now the question is, what do we do? Well, if you lose the embedded reading and keep it lost by the close, then I'm going to look for a challenge of the potential of getting back into this 450 area over time. This is not the place to be a hero. When markets start losing the embedded reading, if they keep it lost, watch out. Now let's assume it tries to rally to keep that reading going. Then the resistance is going to be the 480 level. Keep your eye on that. Platinum, get up to that upper Bollinger Band. If you were sitting next to me, I'd be giving you that elbow. Get out, get out. Why? You don't generally hold those upper Bollinger Bands and stay over them. You pull back to the right of them. And then you're always looking to see what the slow stochastic is doing. Now, if you haven't taken my enhanced Bollinger Band course. This is where you get a doctorate degree in it. This is what this is all about. If we take a look at the palladium market, so we have a higher high, a lower low, a bounce, and an overbought condition. No. If you were sitting right next to me, you'd be saying, I understand, you want to be super bullish, everything's going to the moon. That is not the setup that typically does that. Last we get to the dollar index, and this is the first hit today. Here, this is Friday, and today you're riding that band. Okay, do you like to sell a Bollinger Band, or should you? You better say no. That is not the place you become heroes in these markets. So you have a higher high, a lower low. There's nothing bullish, but there's reasons not to get bearish at a Bollinger Band. That's the point. And then when we get to Ethereum, here's the thing that people are starting to pick up. They're asking, very frankly, okay, is this the rotation where Bitcoin sort of sits, plays around, and this contract comes alive? Well, you can't argue. It got over $4,000. It's performed better than the Bitcoin, but is that a sign that Bitcoin is maturing? I don't know. But in looking at the market with an embedded reading, yeah, the first break in the market I think is going to be well bought, unlike what we just saw in the other metals. So if you want to learn this next step as to how you buy these breaks, if that's what you want to do, I know what I'll be telling my subscribers. But if you want to learn how to buy them after you hit an upper Bollinger Band and you have an embedded reading, well, here's exactly how you do it. Take a look at this video. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and/or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.